Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning, it's Thursday, December 11th, and this is your London Open Brief. Two things stand out today. Post-Fed repositioning is rippling through currencies and metals, and trade policy is back in focus from Mexico City to New Delhi, with a quieter but important central bank docket in Europe. Starting with macro and policy, markets are digesting yesterday's U.S. rate cut. The dollar slumped initially, then steadied, and officials are taking note. Japan's chief cabinet secretary says Tokyo is watching how easier U.S. financial conditions spill over to the Japanese economy. In Europe, the Swiss National Bank is up shortly and is widely expected to hold rates, with officials signaling they don't want to revisit negative rates absent a severe shock. We'll also hear from the Bank of England's Andrew Bailey later. While in the U.S., weekly jobless claims are expected to tick higher, reinforcing that low hiring backdrop the Fed flagged. Meanwhile, the Asia-Pacific session turned risk-averse. Australia posted a weak employment report. The Aussie dollar slipped, and a sharp drop in Oracle's shares after earnings fed a broader tech rethink on artificial intelligence spending. The dollar, after its post-Fed slide, is rebuilding its footing, with euro-dollar holding below the 1.17 area, and sterling softer as traders eye a potential Bank of England cut next week. The yen remains supported by bets on a more hawkish Bank of Japan, though it gave back some overnight gains as the greenback rebounded. North of the border, dollar Canada is hovering near multi-week lows, and in emerging markets, dollar rupee jumped as uncertainty around US to India trade talks weighed on the Indian currency. On commodities and geopolitics, gold has pulled back from a weekly high as the dollar steadies, while silver briefly printed a fresh all-time high before correcting, with the broader uptrend intact. Oil is steady, but an important flow signal. Indian refiners look set to take the most Russian crude in 6 months in December, despite new U.S. sanctions on top Russian exporters, a reminder that Moscow's barrels are still finding buyers. Trade tensions are stirring. Mexico approved tariffs of up to 50% on a range of Asian imports where there are no trade deals, and attention is turning to the North American Trade Pact review cycle, with a U.S. report to Congress due in early January signaling Washington's intentions. In Europe, lawmakers reached a deal to overhaul medicines rules, including a stable 8-year data protection window for new drugs, a notable shift for the pharma sector. And on Ukraine, reports point to Kyiv sharing a new plan with the U.S. as Brussels debates how to approach any future territorial talks. Turning to markets, this mix is modestly supportive for the dollar versus high-beta currencies and leans defensive for global equities near-term. A steadier dollar and higher real rates tone weigh on gold after a strong run, while silver's momentum remains but is volatile. India's appetite for discounted Russian crude keeps seaborne flows ample, a stabilizing factor for oil. Looking ahead, the SNB decision and press conference are the European morning focus, followed by Bailey at the Bank of England and U.S. jobless claims later. Otherwise, the calendar is light, but trade headlines and any Fed follow-through in rates will drive tone. I'll be watching the Aussie dollar against the US dollar for a downtrend to persist after the jobs miss and softer risk mode. I'm also watching sterling against the dollar with a downside bias into next week's Bank of England risk. Dollar-yen could be choppy, but I'm looking for yen strength to reemerge if global yields slip. In emerging markets, dollar rupee has an uptrend on trade uncertainty. And in commodities, I'm watching gold for consolidation after the pullback, and silver for momentum swings after that spike. The takeaway, markets are recalibrating after the Fed, and trade policy is quietly becoming the next driver. Optimism is there, but it's selective and a bit fragile. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.